Welcome to Archie Spencer FX. So you guys are going to be seeing a whole lot more of me. This is my first YouTube video and it's going to be full of some gems for you guys. So I'm a trader. I've been trading now for 6 years. I trade in Forex, I trade in crypto, and I trade in commodities. Whatever you want me to trade, I will trade. Now make sure you hit the like button, subscribe, and drop a comment for what you want the next video to be. I want to teach you one of the strategies which I use on a daily basis. And this strategy is super simple. Everybody can use it, and I'm going to teach you how to use it here. Make sure you've got a pen and paper with you. Everything that I go through you need to write down, and then you need to take action yourself by taking that onto the chart. I can show you what to do, but I can't do everything for you. So make sure you're ready to take action and to learn, and let's get straight into the video and teach you guys a few things. Right, so first things first, we need to make sure we've got the right indicators on the screen. So if you head to the indicators at the top of the screen here in the middle, and you want to search for relative strength index, this one here, then once you click it, we'll add it to the bottom of your chart. As you can see, it's just duplicated it for me. In here, you want to make sure that the RSI length is set to 14, and make sure that you've got it turned on so that you're able to see where the moving average is here. So RSI moving average, mine is blue, and I've got it turned on. You need to make sure that that is already set. And the other settings, sorry, before I leave there, is you want to have the RSI upper band, which will be set at 70, the middle at 50, and the lower band at 30. Now those will all be preset, but just make sure that you've still got those exact settings as well, because it's super important for marking up where price is either overbought or oversold. Because when price is overbought, we don't really want to be buying into a market like that, because it gives us a much lesser chance of it being a successful trade. Now we can flip that the other way around, and when price is overbought, we can sell, but I'm going to show you all of those details here in this video. The majority of this strategy is spent on the 15-minute chart, but you use the 4-hour and the 1-hour to work out the direction of the trade. So we always trade with the trend. Don't try and trade against the trend, because it will only cause you problems. With this, it's very much a continuation strategy. So we're looking for where the price structure changes and shifts. So often that is first led by a market structure break, and then it can be followed by a break of structure. So we don't want to trade the market structure break, but we do want to trade the break of structure. Now that is really important. We can see here that price has come back. So we've moved here, we've made this low, and this was our previous higher high, and price has now taken that out. So this is our market structure break level. If we label that up just like so, that will load in a moment. And now we're looking for the break of structure for the continuation to this move. So what we can do from there is we can draw another line across to where this structure break happens. Now when we see this, we're looking down at the RSI. So when we create this new high, which is what forms in this candle, we're looking to make sure that price is allowing more momentum to the upside with the RSI. So we've pushed up, we've come back, tapped the moving average, or we come close to the moving average, and then we push away from it and make another high. So we need to make another high on the chart, and we also need to make another high on the RSI. So we call this harmony. When the RSI and the chart are in harmony, that gives us much better chances of having a successful trade. Now of course you're going to have times where it goes against you, that is an absolute given. But for this strategy, once you see those things happen, you enter on the close of the candle, and you put your stop loss below the interim low, and you're targeting previous highs. So for us, we would be looking at this liquidity level here. That is our closest liquidity level, and there is the trade, which is a 1.23 to 1. A very good trade. We like all of our trades to be over a 1 to 1. Anything less than a 1 to 1, realistically, unless you're a scalper trading really small movements, is not worth the time of day. We don't want to be having to win more than 50% of our trades to be profitable, because it just puts us on the wrong wrong side of things straight off the bat. So if we can make sure that all of our trades are 1-to-1 as a minimum, that gives you much better positioning for being a profitable trader. So if you see this setup and the take profit is less than a 1-to-1, just move on to the next trade. Don't need to worry about it. Come back to the next one. The markets are always moving. Right now we're trading crypto, which is the best place realistically, I think, to trade this strategy. It's a brilliant strategy. I want to show you guys just a few more options of this. So from here we have our market structure break level here. Once we break through, this is our high, break through, now we create a low, and then this here again is our break of structure level. Break of structure level, and RSI is running in harmony. We've had the dip back here, and then we've moved higher again and created that new higher high. Our entry point goes in here, stop loss goes below the interim low, and we are targeting the liquidity level above. Now, as you can see, this is a much better risk to reward trade. So we can trade anything up to 3R. I found from all the data I've collected with this specific strategy, anything over that time period, it just doesn't work as well. You quite often see it get to like 3.5R and then price will just plummet. So you're better off being on the right side of it and not being greedy. If you're a greedy trader, you will not make money in the markets. The markets will take you for a dance. So really important that you don't let greed take over you in these situations. So we look for a few more. We look for the lows, we look for the market structure break levels, and we look for the breaks of structure. So down here, this looks like one just here. So break of structure, market structure break, sorry. Then we move on to a break of structure, which happens just here, and our stop loss goes below the interim low, and then we're targeting the liquidity levels above. Now obviously this is a failed trade. This is not 100% win rate. You're not going to win every single trade that you take with this strategy, but it's the law of large numbers. So what you have to do once you've watched this video, go into TradingView, go into previous history and trade the charts. I want you to go back in the replay mode, and I want you to trade this like it's real life, and I want you to collect all of the data. So what you're going to do is you're going to open a spreadsheet, drop me a message in the comments. I will give you my own spreadsheet which I use for this, and it makes things really simple for you. So what you have is you have your trade number, you have your date, time, the currency pair, whether it's a short or a long, your entry, your stop loss, and where the position closes. Now when you go back and do this, you're going to work out that this strategy has around a 65 to 70% win rate, which is extremely high, especially for when we're trading the majority of them a 1-to-2 risk to reward ratio, which leaves you in a brilliant position to be able to maximize those profits. So I just want to show you guys, let's have a look at a couple of sell options for this. So we can see here we were here consolidating. We've had our market structure break just here. We've had a retest back, but this time we've broke above the moving average. So now this is more than a retest. This is not something that we're looking to then trade when it comes back below, because it's not in harmony right now. We need to wait for it to come into harmony. So we wait, and then we see this move here. So now we've had price come down below the moving average. We've retested back to the moving average, and now we've created a new low. So that is the trade entry point at the bottom on this candle. As soon as that candle closes, you can enter straight in, stop loss at the interim high, and we are targeting the liquidity level below just there. So it's another 1-to-2 risk to reward. And with this strategy, you want to go back and test it and see how it works for yourself. But with me, I love the continuation. We can build onto this again and again and again and again and again. So we're now in this move already. We can see we've had another break of structure, and price has made a lower low on the RSI and on the charts. Again, we're running in harmony. Now, one thing you do need to watch out for with this is we are now in the oversold region here. If we enter into another trade here with our stop loss like so, we're going to be targeting the liquidity level below here, which is very tight. It's not feasible. We don't have our minimum of 1-to-1. Price is oversold. We don't have our 1-to-1, which means it's not optimum trading conditions. We don't want to get in. It's just not worth it right now. Got a trade running, so don't try and be greedy again. Just let it scale in if it's necessary. Sometimes you'll see it's perfect for it, and sometimes you'll see, okay, this isn't quite going to work exactly how we wanted it to. Price is oversold, or the RSI is no longer running in harmony with the trade, and that's another way you can look to exit these as well. So instead of targeting liquidity levels, what you could do is you can wait for price to move back above the moving average. So for this one, it wouldn't have been optimal because we pushed actually back again the moving average here. So we would have pulled out the trade extremely early at a 0.5R, which is not very good. So that's another thing that you can look at when you do your testing to see which strategy, which alternative move on this strategy suits you best, because I can teach you the exact strategy that I'm using here, and some people will make it profitable and some people will continue to lose money, and that comes down to you, the data you collect, and also how you action yourself as a trader when you see the markets. You're not here to predict what the market's going to do. You can't do it. I don't know what the market's going to do next. Nobody does. But what you can do is you can have your system like this one here, which allows you to make the most out of the markets every single day. And this strategy profits me roughly around £3,000 a week. So it is an incredible strategy. That's 12 grand a month. It's extremely profitable. If you can master this strategy, it will be the only strategy that you need to be a successful trader. I've got multiple mentees which I've taught this strategy to them as soon as they enter into me, and they are already making thousands of pounds every single month. If you can nail this strategy, you will be profitable. So make sure you drop me a subscribe and a comment and a like on this video for more content around trading, and we can all start making some money together.